I'll give it a little bit, and then we'll get going. But good morning, guys. How's it going? What's up, Chris? What's up, brother? It's almost Christmas too. Tomorrow's Christmas. That's crazy. This year went by so fast. I would say that for the most part, for most of the year, it's been really good. Like, there's been a lot of volatility. There's been a lot of runners. A lot of opportunity to make a bunch of money. Unfortunate that I lost it all, but I'm restarting, and I'm gonna do it all over again. Even better than last time. So we'll see. But yeah, it kind of sucks. I hope 2021 we're gonna have a lot of volatility as well. That'd be really nice. So I can get right back into it. But yeah, 2020 was definitely an amazing year for volatility. It's been crazy because there's been a lot of manipulation. So it's been like, if you know what you're doing, then there's been a lot of opportunity to make money. If you don't know what you're doing, especially if you're on the short side, then you could have lost a lot of money. But yeah, let's get right into what I'm looking at today. So for the gapper, the only one I'm watching is CEI, unless there's something else that popped up in the last several. Let's see. Don't think I saw Husa. Don't care. So yeah, CEI is really the only one that I'm looking at. The float on it is pretty sweet. It's not a low float. It's about 20 million float or so. It's not really institutionally owned. There's like 1% institutionally owned, so that's good. And we're up over 100%. At this point, we're up 100%. On the daily, obviously there's a lot of resistance here in the $40s, which it's broken through. And there's just a bunch of levels that you can use. $2, $2.50. It all depends on kind of how it trades today. But a very simple game plan for me on this one. If we're going to be holding the gains, holding its gap into the market close, then I'm going to be looking for an 11 a.m. plus trade. Let it play out, let it do its thing in the morning. I'm not going to get stuck on the front side or anything like that. And I don't need to. And patience is really what's going to make you money on the short side. And it's really tough to discipline yourself to do that, because you never want to miss the top as a short seller. But more often than not, at least for myself, I'm always early rather than late. And I don't want to. That's how I lost a lot of money. So I don't want to do that anymore. I don't want to be on the front side anymore. So 11 a.m. plus, if we're holding the gains into the market open. If we, however, don't, then I would be looking for morning spike versus this 183 level, the pre-market highs. And as long as we have at least 101 risk to reward, so it should be a solid trade. But other than that, that's gonna be the only exception that I will take a trade out of the open. Other than that, looking for 11 a.m. plus move. But actually, looking at it now, we may see this lose, more than 50% of its gap. It's looking pretty weak right now. Oh, it held 150s. Okay. Chris, speaking of beginner, I've tried to always be as patient as possible, and it's never paid off for me, so I agree. Yeah. I can definitely agree with you on that. being as patient as possible is, as a short seller, is literally the best thing you can do. Obviously, aside from like learning the setups and the basics, but when it comes to execution, being as patient as possible is literally the best thing you can do. You know, yeah, you might miss some trades because, you know, they might drop and then that was the best place to enter. But for the most part, over the long run, it's better to miss a couple trades than to be on the front side, you know, more often than not. So anyway, that's CEI. The other one that's obviously up a lot is SIF, but this is not something that I'm going to be trading because it's a micro float. You know, its float is below 3 million, so I don't want to touch that. And this is the other thing that I've changed, you know, this year, going into this year, is I'm not going to be trading stocks that are under 3 million float, just because these are the ones that squeeze. These are the ones that are manipulated most of the time because they're easy to move. There's not a lot of supply. There's a lot of demand, and as you can see, you know, this is also a fresh chart on the daily. There's no volume traded usually. Generally, I think there's only one day traded like 17 million shares. But you don't want to be trading these kind of stocks anymore. You can make a lot of money, you know, because generally these are the biggest gaps, but you can also lose a lot of money. So over the long run, the stress and all the losses that add up just, to me, are not worth it anymore. So the other two that I may or may not trade, but they are on watch, is going to be OCGN, FRSX. OCGN yesterday is a trade I took that I lost on, which I shouldn't have taken in the first place. But, you know, just because this month has been so slow, I got some FOMO, and I ended up taking this bounce here, you know, risking this high of day, and it squeezed through that high of day, and then held up, you know, all day. And we saw a lot of movers yesterday that were, you know, came from sub $1 and that ran, you know, OCGN, FRSX. Oh no, FRSX wasn't a sub dollar. JAGX, JAGX from yesterday. Then SENS, I think, SENS. So there's a lot of sub $1 movers recently, the last couple days. But the game plan on OCGN, if I do trade it, is really, you know, I would like to see this 215 level break, and then a, you know, a pop or a squeeze over 250. You know, risking this 305 level. Or the other trade I see is, you know, if we don't get that, you know, break of 215, you know, you're still more or less on the front side. So it would be like taking a much riskier trade if, you know, if you get a straight pop to, you know, 350s plus or 250s plus, sorry. But I mean, that's the thing, like, I think that if we hold this 215 level on the daily, there is potential that it can squeeze and break out, but it's more likely than not to fail. Plus, we had a lot of consolidation. We had a lot of time that it traded with a lot of volume in this 250 level, so it's likely not going to break through. But, you know, just be careful if it holds these levels today, you know, and maybe even going into next week. If we hold these levels, then we can see a squeeze, but more likely than not, if we retest these levels, they're going to fail. And same game plan on FRSX, and I think this one has the better potential to fail. And you can see that pre-markets died off pretty hard. So the game plan would be also to short pops into the $6 level, risking the $6.45 level, and then you can take it all the way down to like $4. So you have $2 of range with like 50 cents of risk, you know, if we test these $6 level. The only thing I don't like is that FRSX did not spend a lot of time in the afternoon at these levels. It did spend a couple out, like an hour and a half, so it's not a whole lot, but it looks much weaker than OCGN does. CEI is becoming super weak. I have to double check to see what's the 50% mark. Hold on. Okay, so it's still above the 50% level. So at this point, still, I would be waiting for 11 AM plus. If we fall below 132 pre-market, then I would be looking for a morning spike versus the pre-market highs, which it's very possible that we might crack below 132. I was hoping this would hold the 150s, and then we could get like a nice morning runner again, because we haven't had one of those in a very long time. But I mean, it is what it is. You can't force price action, but momentum's gonna come back in after New Year's. That's for sure. You know, December is known for a lot of selling. Well, December, January, and Feb, and then, you know, that's when it starts to pick up. But end of December is usually when things start picking back up a little bit. But we'll see. If there's no other questions, that's going to be it. That's, you know, CEI, FRSX, and OCGN are the three that I'm watching, with CEI being the main watch. And Merry Christmas to you guys, and I'll see you guys next week.